that to you too. Anybody else in Oregon that did not get my email, I have a tax notes item that I can't post because it's a subscription item, but I did email it to a bunch of folks. So if you are in Oregon or doing Oregon returns, there's a couple of tax changes, conformity issues, let me email that to you. So John at Tax Practice Pro will get that right out sometime tonight, because that's the kind of guy I am. And there were 20 more people in the waiting room than I see logged in. So just give me 5 more seconds and then we'll start. 10 more seconds. Boom, 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 boom. Another week where I've got so much content that I needed to, yes, I know it's just a bill, Donna, but state level conformity bills like that tend to happen. What's Paul want me to send? Please send. Oh, please send the Oregon data. You have to email me, John at taxpracticepro.com. I can't email it out to everybody. I have a subscription to tax notes that costs a small fortune, and they're very picky about what you do with it. But I just wanted to get the item out to Oregon people because it was nowhere else. So if you want the Oregon issue, John at taxpracticepro.com, and I will forward to you because you're my friend, which I guess is not as bad a violation of copyright as sending it to a couple of thousand people. Yes, and if I hadn't had to create something to post about the other bill, Donna. Yes, but they want to read the article, Donna. If I hadn't had to post so much, spend so much time writing a testimony for the EA exemption bill for Oregon, hopefully they're going to pass that for us. And then all of you will no longer be illegal. All right, someone likes the new format from the slides. The new slides come, a lot of them are done in Gamma. Gamma is another AI tool I'm using. I take my notes and it lays them out. At least it gives me nice uniform slides. The front page here is, this one was done in ChatGPT. Some of them are done, the Nano Banana engine. Can't sound like a New Yorker. The Nano Banana engine runs inside of Gemini 3. And sometimes we're running that depending on what I'm trying to get it to do, and depending how grumpy it's being, because AI is grumpy sometimes. And we're going to go. All right, everybody. Welcome to episode 113 of the Weekly Tax Update. It's Friday the 13th, the day before Valentine's Day. So what better than to suggest the documentation be your Valentine? For those of you with no Valentine, I'm so sorry. For the rest of us, happy Valentine's Day. Good luck trying to get into someplace and having an enjoyable meal tomorrow. Oh, this is the TV remote and this is the clicker. There we go. All right. This is me. If you're looking for me, if you didn't get my email address, you want me to send you the Oregon information from tax notes, scan the QR code right now, and that'll populate your phone with my information. Send me an email and tell me what you need, and we'll get it right over to you. Happy to do so. Finally, it's only updated through last week, but the IRS is getting a little bit better. So here are the updated numbers through February 6th. During COVID, they were always a week behind. It's like the end of the day, Friday, someone posts the numbers. So today, today we'll just run with the week ago numbers. Hopefully they'll get better. Remember, this Monday is a federal holiday, so I don't know what's going to happen next week. It'll be a very shortened week. So first, identity theft, embarrassing, still June 2024. You're reading that correctly, June of 24. No movement in the last 4 or 5 weeks. They are still on June 2024. That's scary because it suggests they are getting more than they are able to get out. And either they'll need to allocate more resources to it or figure something out as this continues to only get worse. We've moved up a bit on business identity theft to September 2024. E-file, 3 weeks. They say that stuff is getting processed. I have seen refunds come very quickly. My daughter got a notification that her money would be there Wednesday. Her bank pays early if they see the pre-note, and in fact, she has her refund in like 8 days. So one happy little camper there for her first full-time paycheck. Original returns, they're working on ones that are from January of 2026. That's a good thing. Amended returns, they're working on September of 2025. If you talk to your colleagues, they will all tell you that it's a year or more to get an amended return done. The IRS will tell you that, in fact, it's not really a year. What the service will tell you is that returns that require manual review, and it seems like all of them, right? One thing you can all do, we were thinking about this, and maybe I can figure out a FOIA request to get some information on it, but those of you that send in a CP2000, send in a 1040X on every CP2000, if you read those instructions, most of the time you don't need to do that. You can just write in what you're changing, attach the missing forms or the changed forms, and they'll make the change for you. So maybe that's going to help. I don't know. Nobody asked me, as usual. Nobody asked me for my insight here. I'm just offering it up to you because I've got nothing else to do. Business returns, they say, are processing within 21 days. 1040 originals from January of 2025 that are mailed in. Otherwise, April of 2025. Form 1041 original returns filed in January of 2026 are being processed. Form 941 data, you guys should let me know if you want this or not. I think that some of this we're wasting time going over this, but January 2026 941s and amended returns from a year ago, and that excludes ERC claims. So plenty of folks that want to go back and, my new S-Corp client didn't take a salary last year. I'm going to go amend everything under the sun. In addition to backing stuff up, it's going to be a year before you hear on that stuff. You're probably going to hear about 3 and not 4, whatever other problems. Interestingly, this went back from 3 weeks ago, the last time they updated it. This went backwards a month. They were up to April. Now they're at March. So I don't know. 2848s have dropped in the last couple of weeks from 6 days to 5. I can verify that. We do track these things here in the office. I probably recommend you track everything you submit to make sure it gets when other than an e-filed income tax return, because those folks will call you up and tell you that they didn't get their refund or something. But I would track probably everything in the office. So that 5-day, there's a day off on Monday. This is going to become 6 days by next week, guaranteed. Going to add a day. W7s are through December. 8802s are in November. That's pretty caught up for that unit, except once January 1st gets here, everybody that needs a 2026 residency certificate is going to submit, and then they'll get 3 or 4 months behind. Form 1045, tentative individual refund on an NOL, they're way behind, back to August of 2025. Same thing with corporate tentative refunds on NOLs, November of 2025. SS4s seem to process on an okay timeline, but fax submissions have jumped from 8 days to 10 days in the last couple of weeks. That's pretty interesting. I can't say why, other than that's a 25% jump. Maybe people are reorganizing this year, hurrying up to get new entities out. I don't know. Mailed in correspondence is just terrible. Individual correspondence, 1040 level work, they're back October 2025. Business correspondence, solid 10 months, 11 months. Other correspondence currently processing any other mail from July of 2025. Even without the recent shutdown, they're in bad shape. Electronic filing is the fastest. Paper returns, paper anything is a bad idea. 2848s are getting processed in some cases within 4 business days. We don't fax anymore. We upload everything. with a 4-day turnaround. Generally, we try not to have to call the IRS. If we can work online, we work online. Saves the client some time. Certainly saves me some time. Short of that person who shows up Thursday at 5 p.m. with a payroll levy and Friday is payday. Short of that guy, I don't think you need to call in because most of this stuff is not going to be an emergency that you caused. All right, so plan ahead and communicate to your clients how long it's taking to get some of this stuff processed. So what are we going to look at today? I've got yet another look at telephones, but this was done through a FOIA request. Very interesting what a nonprofit requested and what it translates to and who they're looking at. So I think you'll find it interesting. Department of Homeland Security and the IRS have a controversy right now, and they have some violation. Section 280E, marijuana compliance. The Congressional Research Service, and if you know our friend Carol Pettit used to work there. She's retired from it. She's an EA, but retired from there. Amazing branch of the government you never ever heard of. But they do research either by request of members of Congress or of certain trending or emerging issues, and they keep it up to date in case someone in a congressional office wants to get up to date. Hi, here's what we've written on that, our vetted and documented piece. We'll talk a little bit about Trump accounts, not much. I just want to tell you something that's going on. IRS added AI policies for IRS employees have been added to the Internal Revenue Manual. We're going to talk about that. And there are some new emerging issues, including Oregon conformity, which we won't mention a lot of, and Malta pension plans, although I think I dropped that. So we'll talk about that. So IRS operations, before we started cutting people, before the shutdown, and probably before COVID, but exasperated since COVID, the IRS is in trouble. For an organization that relies on taxpayer service and customer service, they're not cutting it. So some of these service level failures is essential for us managing client relationships, expectations, and maybe liability. I'm going to show you something super important here. So, sorry about that. So there's a FOIA out here for the phone data of RICS, the Return Integrity and Compliance Service. Talk about that. The Center for Taxpayer Rights, a nonprofit that looks at privacy issues and the rights of the taxpayer, not only with the Internal Revenue Service, but other places. And they did a FOIA request. FOIA is Freedom of Information Act. It's when we write to the government agency and say, hi, I would please like everything that's publicly available on this topic, subject, files. You have to know that it exists. But if it's something, they won't do a fishing expedition, they won't answer questions. But boy, if you say to them, send me your phone logs, send me this or that, or if you send me the XML data stream for that tax return, as one of our attorney friends did in a fight over whether a form was filed or not. So this phone center is maybe the worst within the Internal Revenue Service. So let's talk about who they are and what they do and why this is important to every one of us. Return Integrity and Compliance Services. That's like the Center for Medicare and Medicaid Services, CMS. You had no idea who they were until the Affordable Care Act came along. Otherwise, you didn't know that agency existed. Same thing here. This is a department within the Internal Revenue Service, and they manage critical functions related to identity theft, authentication. Think internally, how are we going to prevent fraud ahead of sending you the tax return? That's the Taxpayer Protection Program, the pre-verification, pre-refund EITC exams, and the automated questionable credit program, something I never heard of before, but it's when you get that letter that says, hey, let's talk about this credit. This is the only enforcement function within the Taxpayer Services Division. So this is not part of exam. It's within the actual processing division, right? So they have an overall effective answer rate of 28% for the most recent year available, which is 2024. Now, you remember we've talked about the IRS's previous 85% number that then they've lowered to 70, and that was really probably less than half because they have a funky way of counting both calls and successful calls. In their worst week, 67% of calls were answered. There were 1.28 million Department of Homeland Security requested verifications of taxpayers. They were only able to verify 47,000 of them. That's going to tie into this, dovetail into this. So there's that myth of the 88% level of service. In April of 2024, the IRS had sent out a press release that said, best season ever, 88% level of service on our main phone lines. And that's the 800 number. That's it. The 800 number that a taxpayer is going to call. The figure was misleading, and it creates this dangerous gap between reported performance and taxpayer experience, especially when the client's asking us to make a phone call or a follow-up, and we're like, it's a Tuesday, or it's a Monday during busy season. You can't get through. It's busy. It tells me we're too busy, call back tomorrow. It puts me on hold, and after 2 hours disconnects me. Taxpayers don't want to hear it. They Google it. They ask ChatGPT. 88% of the calls are answered, buddy. Who are you kidding? So the 88% number excluded the RIC lines, PPS, and all the other specialized service numbers. So the level of service definition is only counting calls that are answered out of net attempts. Excludes busy signals, excludes calls where I'm on hold and I hang up, excludes calls that never get to the queue. So those calls where I call up and it says, you've reached us on a very busy day, hang up and call tomorrow. None of those count as attempted phone calls. So it's easier to get a higher number. Certainly, if somebody in the media said, can you tell me how we calculated that? You might get an answer, which they have here. The vast majority of taxpayer frustration, the disconnected calls, the endless hold times, the inability to get to a human are not reflected in the reported metrics, the numbers that they're giving them. So 3 big RIC phone lines in that department. TPP, which we said was the, we did say it was something, right? Oops. It's the Taxpayer Protection Program, the Automated Questionable Credit Program number, and the International Taxpayer Protection Program. They kind of split those two things out. And by doing that, I think you get Philadelphia for those calls. So this year is worse. Should be worse for all of you, although they've managed to stay open. RICS had 11% fewer employees in October of 2025 compared to a year before. Remember, October 1st is the start of the new fiscal year, so they probably make some sort of measure there when they're doing projections or budget requests. Accounts management leadership, that's the folks that do this within the tax return processing section, reduced the phone service goal from 85% to 70%. You heard that last week or the week before. And the last time the IRS performed below 71% was during the post-COVID surge. So we have to anticipate that we are not going to get through. We're going to have courtesy disconnects and even lower answer rates than 2024. And that doesn't even account our tax pro courtesy disconnects, where the person on the phone says, I don't know what a first-time abatement is, call back, and hang up the phone. All right, the next failure, and I don't mean for this to be negative. The IRS wants to process as little paper as possible. For the things they do have to get on paper, they want to process them digitally on the front end. That probably like your office. That paper comes in from that person who won't use technology. You scan it in, give back the paper. We do that with notices here. The first thing happens to a notice stamped received, scanned in, and the notice goes into the recycle bin, but the shredding cabinet. And we have a shredding service that picks it up and issues a certificate of destruction eventually. So their target was they wanted to file the 940s, the 941s, the 1040s, and 28 different attachments. They wanted to get them processed electronically. And that would be 78% of all the paper returns that come in. They fell short of that. So they launched a pilot program that was going to run for 2 years, from 2023 to 2025. They received 9. Now, this is post-COVID, right? No COVID here. They received 9.8 million documents, and they successfully scanned in 5% of them, $517,000. They spent $60.6 million, by the way, by April of 2025, and they hadn't scanned in any returns. The rest of 2025, the interim contractor was able to scan 7% of 5.7 million returns of forms. We're not doing very well here for the money they're spending. So back in April of last year, they said, let's try a new approach. They canceled the in-house system that was the zero paper, and they went to the zero paper initiative. They want to process the 26 highest volume forms during this tax season. But they had problems with the contractor, problems with background check clearance. That was an issue 2 years ago. Remember, the IRS wanted to hire 5,000 people, and they hired like 100. They had all these issues with the people they did select, either failed the background check or there was a delay with the background check. So this creates a problem. And of course, I don't want to work for a place that can't get me on board, can't get me hired, can't get me my clearance. So the contract itself got extended here. So they spent $8 million on just on extensions to get to August. $76.5 million was awarded during 2025. IRS has so little money, and their Inflation Reduction Act money, that $80 billion was taken away, a lot of it, half of it. They have another $68 million was paid or obligated of that. So no returns successfully processed in-house, 0. All right. Now they have another problem. They have 1 billion pages of prior year stuff that needs to get digitized. We're going to talk about what these are, but they have decades of documents that have to get kept. Gift tax returns, estate returns, and some other things. I'm going to show you in a minute. I didn't realize they keep gift tax returns as long as they have to, but it makes sense once you know it. So if you want to look at this graphically, the dark blue bar on the top is what they have to scan, and the blue bar in the middle is what they think they've gotten done. So they've got more than half remaining. And this is just on their 709 pilot program. Sorry about that. These are out of order. Form 709 gift tax returns were prioritized for historical scanning for a couple of reasons. One of which is that effective this year, they're going to be e-filing them. So they're going to have no more increase to the paper pile. So the 709 was prioritized for historical scanning because they have to retain these records for lifetime of the person plus 40 years if it's connected to estate tax matters. So remember, you're attaching these returns every year, and you attach them, I think, to the estate return at death, right? You have to keep track of all these gifts. So the pilot results, though, revealed that they've got all sorts of concerns. They're not going to meet this stated goal of having this done in 5 years by 2030. So we said from December of 23 to July of 25, they got in 58 million pages, 41% of the 143 million of Form 709 pages. Okay. They terminated the contractor due to low volume getting done. And TIGTA is now concerned. TIGTA is Treasury Inspector General for Tax Administration. So the IRS management can say, this is what we're going to do. Congress can scream, this is what they want. TIGTA are the auditors. They come in, they look at it, and they're like, guys, you got to be kidding. And they give you the reality tour. The idea behind the digitization project is that they will save $40 million in costs annually. Probably rent, security, right? The IRS operates all of these off-site secure filing centers. During COVID, this was an issue with FOIA requests because of the limited number of people that could work in those buildings trying to find records for you. 5.7 million in facility costs, 34 million in staffing reductions. Wow. But if they miss the 2030 deadline, they're going to continue to incur storage costs. You know, that's interesting too. They probably are not renewing some of their leases under the belief that, oh, by the way, we're going to not need them anymore. And they may find themselves having to move paperwork. That's going to slow them down even further, moving boxes of files. Oh, dear. So some thoughts here, just dialing back to Rick's for a minute. If you have any clients that you engage with, and I would hope that if a client gets a pre-refund notice, you're not doing the work for free, because I can't see how it's an issue of yours that the client has this issue. Sometimes the truth comes in installments. Other times this is just the way it is. So if you're getting paid for these things, you should be getting paid. You want to set realistic expectations. You're going to need to make multiple attempts just to get somebody on the phone. You're going to be calling maybe early in the morning, later in the evening. And then when you finally get somebody on the phone, they may not even be the right person. So you want to get the right fee. If you used to think you had 1 or 2 follow-ups, I'd plan on 3 follow-ups for every case. Add 3 hours of time, get paid for it. If you're using call-in queue, what's the cost of call-in queue? Make sure you're factoring that in. We haven't done it yet, but we've talked here in the rep side of things to doing 2 things. One, adding a $25 certified mail cost to every client, to every work that we do. That would include the cost of the postage and waiting in line to get it stamped and turned in. Things like this, assume 3 or 4 calls. What's it cost you for a staffer? Or if you do it yourself, what's the opportunity cost? This time of year, if I could be doing a $400 tax return, right, in that hour, hour and a half, and instead I'm waiting on hold or multitasking, either way, I need to get paid for that work, for the opportunity cost that I'm losing. Of course, clients should always be told to get you a notice immediately. As soon as it comes in, one of the things, of course, we're seeing is you have 30 days on a notice. It takes them so long even to get it keyed in. You're going to get that second notice. That's why we take a power of attorney from everyone. And that's why we warn people. You're going to get another notice probably before this gets processed. With only a 7% scan rate for the interim contractor, we want to electronically file whenever we can. I have a couple of 709s. We're going to give those a shot on e-file. I'm not 100% sure yet that I even have e-file available. CCH can be a little slow on things, and they only update the software once a week. Documentation is critical. We track on whiteboard that somebody can't see. We're tracking the date, how long it's taking stuff to process. You can do it on a Google Sheet too, probably that's shared across with your team. We're tracking anything from 2553 filings, the New York State CT6 filing, and 2848 uploads. Why? Because if I have 5 or 6 2848s go out and all but one of them clear within the 4 or 5 day expectation, only give it another day or 2, time to go look at the document, what's wrong with it, resubmit. Again, assuming that 88% service level is going to apply, the more specialized the line, the less likely you're going to have excellent service with it. The taxpayer advocate service criteria includes systemic burdens and inability to reach the IRS after multiple attempts. So, of course, if you have documented your repeated call failures, document it really well, and then give TAS a call, refer it to TAS. Now, remember though, one, TAS is behind. Why? Because too many of our colleagues don't work a case and just it's been 10 minutes into the 8th day and your refund isn't there yet. Send it to TAS. Those guys have to learn. That's not a good idea. Conversely, though, remember that TAS will kick these cases. All they'll do is, if they agree with you, they'll kick it back to their counterpart in processing and say, hey, this guy's right, top of the pile, please process it. We have a couple of things that have gone in through TAS and got sent, you're right, and sent back, still not processed. So congressional inquiry, next stop. Okay. So update your engagement letters, especially the rep letters, to specifically address service delays, extended processing times, and why break out on that bill, right? Additional phone time, temporary charge for additional phone time, whatever you want to call it. We already talked about our internal tracking systems. We watch TIGTA. You don't have to. Staff is pretty well trained on what to do for TAS and how to do it. I have to tell you, we've had the best experience showing up at the live problem-solving days. Pretty much if you're in the New York area, anything that Agostino and Associates, Constellanets does, they are doing a live problem-solving day. So you can walk in with your case, fill out your Form 911, bring your supporting documents. One woman who was there had 11 cases, and they took all 11 cases from her. So they want to help. All right, next piece today. Our friends at the IRS have a taxpayer data privacy violation. So the IRS is struggling with basic operations, as you know. We cover this every week. They have enough breaches of taxpayer confidentiality. As we talked last week about the large breach that ended up in the hands of the media, and that Little John, who went to prison over it, and his employer who lost their contract. Well, there's a controversy over the Internal Revenue Service and the Department of Homeland Security data sharing. And this has become yet another threat to how tax processing is supposed to work. So, all right. April of 2025, there was a memorandum of understanding signed between Treasury Secretary Scott Bessent and Department of Homeland Security Secretary Kristi Noem. So this memorandum was going to allow ICE to request names and addresses of individuals suspected of illegal presence in the United States. The IRS would cross-verify the names against tax records and help locate the individuals for deportation. Let's forget about how you feel about this ethically, morally, legally. It's what they're doing. The purpose of the agreement, the Department of Homeland Security claimed that it lacked sufficient data to locate people. The memorandum was supposed to allow ICE to leverage the IRS's database, because people that are getting a check give you their address so that they get their check. And of course, it has historical data. So millions of folks who have ITINs or who might not be here legally. Having an ITIN doesn't mean you're not here legally. But many of these folks have filed, and they relied on the IRS's promise that tax records are sacrosanct, right? We don't use them for anything other than where's your tax return and processing your tax return. Now, in protest to what they're doing, a number of IRS officials would not give, resigned over the memorandum of understanding. You might remember, too, when the Department of Government Efficiency was visiting agencies and wanted the keys to Social Security's database and a number of other things. These folks said, I'm not giving that to you. I'm resigning over it. So some high-level folks here, an acting IRS commissioner and two chief privacy officers, both resigned. Unprecedented to have high-level folks like this resigning over an internal skirmish like this. So what happened? 47,000 taxpayers' data was improperly shared. So there's a court filing by the IRS Chief Risk and Control Officer, Dottie Romo, and it's an interesting read. So Department of Homeland Security had asked for 1.28 million individuals' data, and the IRS verified 47,000 names. Now, you might remember when Billy Long had his couple of weeks as IRS commissioner, they had asked Billy for the data, and he said, that's not what the memorandum of understanding says. So even, they wanted all of it, he wouldn't give them all of it. But I guess there were 47,000 people maybe with alleged crimes. They shared the data. Additional data was shared, though, right? They verified the names, and then for less than 5% of them, they provided the personal information, where to find them, the address. So even when the Department of Homeland Security couldn't provide sufficient information to identify the individual, they still disclosed data. So this potentially violates federal law, 7216, 6103, a bunch of places. Personal information that was shared included your residential address and other details like your ITIN, maybe date of birth. This was only discovered recently, according to an article in the Washington Post that we read. Treasury notified the Department of Homeland Security and said, all those records you're not supposed to have, you need to destroy them. Now, the courts have blocked the agreement in full, the current memorandum of understanding. And Massachusetts court even ordered the IRS to stop sharing addresses. That's a federal court. So 6103 and 7431 are the statutory protections essential that protect taxpayers. And I can just see this now in a few years. Did the IRS share your data with another government agency? You might be due compensation. Please call this 800 number, right? You'll get an attorney who's going to get you some money. You have to pay tax on it, but they'll get you a big settlement. So 6103, confidentiality and disclosure. Return information and the tax return itself is confidential. There are strict prohibitions on disclosure by the IRS and its employees, hence Mr. Littlejohn going to prison. There are very specific narrow circumstances for disclosure to law enforcement, mostly related to tax administration itself. In other words, they can give the stuff to CID. Someone's going to comment when I say this in the comment section. I believe also there's a line that says Congress can request, there's a committee, and they can request any tax return they want, which was that battle they had over Mr. Trump's taxes when he was candidate Trump and during the first Trump administration. They wanted those tax returns. Criminal investigation. Even criminal investigations have to meet certain criteria. We can't say, hey, he didn't file, we want that data. It's got to be a little bit more than that. And then enforcement, immigration enforcement, doesn't fall anywhere within the exceptions of 6103. Hey, we're looking for the guy because he overstayed his visa. No, that's not an exception to providing tax return information under current law. Section 7431 allows for civil damages for unauthorized disclosure, and the minimum is $1,000 per act of unauthorized inspection or disclosure. So 47,000 names times $1,000, that's what, $47 million minimum. You know someone is going to take on the federal government here to get a third of $47 million representing them. Now, there's individual liability here for IRS officials. This is why some of those top privacy executives said, I'm not going to be a party to this. Same thing. They can have those civil penalties of $1,000 per item, plus other damages, plus legal costs. And it's a crime. So Public Citizen filed a lawsuit on behalf of immigrants' rights groups right after that MOU was signed. The Center for Taxpayer Rights signed on as a not litigant, but for, it's the other party to the suit. The courts have issued preliminary injunctions blocking the data sharing back and forth. Tom Bowman from the Center for Democracy and Technology, the improper sharing of taxpayer data is unsafe, unlawful, and subject to serious criminal penalties. No kidding. I just read that to you, Tom. Last November, federal court in Massachusetts blocked the IRS from sharing that information with the Department of Homeland Security. In a statement to the Hill magazine website, political website, Department of Homeland Security defended the data sharing arrangement, said they're doing what we should have done all along, right? Give me that stuff and let's go fly the flag and chase after people. The agency stated its goals included scrubbing individuals from voter rolls, identifying what public health benefits undocumented individuals are using, significantly broader purposes than the Memorandum of Understanding stated. So much for airplane mode. I apologize. So they've all gone radio silent now. The IRS, ICE, Treasury, nobody's responding to requests from any of these agencies as to the status or what they're planning on doing. This is something worth monitoring. If you work with folks who might be affected here, at some point you might want to reach out to them if this comes to fruition and say to these folks, listen, you might be due compensation. Here's the information we have. 6103 applies to everybody who files a U.S. income tax return. They're entitled to this protection. If your client asks if the data was shared, well, maybe keep a list. They haven't said anything they're going to do yet, but at a minimum, there's probably going to be a lookup page at some point. All right. And we've, don't ask, don't document is my favorite here. And you can watch here, and I'm going to tell you what's going on with this case as we find more things. So, Congressional Research Service, just to switch pages. I mentioned Congressional Research Service before, and I won't beat you up over this, but Congressional, with the possibility of marijuana rescheduling into a probably a Schedule 3 drug, which has medical use under supervision of medical professional. You're going to at least see medical marijuana. Everybody forgets that. They think all marijuana is going to get moved to Schedule 3. I think you're going to just see medical marijuana move there. Recreational marijuana will still be federally illegal, state legal. But when they do this, congressmen are going to ask for information. They're going to want to understand things. They're going to have constituents asking information. So they want to be continuously updated. So recently, this was updated by Congressional Research Service. And for those of you who have never worked with marijuana returns, they can end up with tax rates that are as high as 70% of their gross because they can't deduct most expenses. So I could put you to sleep with this. We used to teach a full day class on it. As long as you don't mind that it's a little outdated and I had more hair, by all means, I've got videos. They're not posted. But if you email me, I can let you watch some of these videos that we did way, 5 years ago was the last one we did. I used to do a lot of work doing a full day taxation of legal marijuana industry program, and we had a number of other practitioners that traveled around with us. So happy to let you watch any of that stuff. The federal versus state conflict is that it's federally illegal as a Schedule 1 controlled substance under the Section 812 Controlled Substances Act. There's a great line in the movie The Wolf of Wall Street when they're talking about, his favorite drug, which were ludes, and ludes got, eventually somebody came along and the federal government Schedule 1'd them. That's a throwaway line, which I thought was hysterical. It was meant for me, maybe, because I know what that meant. That they moved ludes into Schedule 1, which is no value, no medical value, even under supervision of a medical professional. Right. By the way, $39.1 billion in revenue in the U.S. by 2029. That's a lot of weed. The statute is just these couple of lines that you can't deduct. No deduction or no credit is allowed, period. Now, back in the day, let me tell you where this comes from. So it was a court case, Edmondson versus Commissioner from 1981. Short version, Edmondson hadn't filed for 1975. The IRS sent him a notice and said, hey, you got to file. So I think Mr. Edmondson, if you are old enough to remember the days of the forms in the post office and the library, I think he went down to the post office and took one of each form off the shelf and went back. So he's sitting there. They asked him to file a tax return and bring it down to the office. So he's sitting there. He's up all night. He says, how am I going to report all this money? All I did was sell drugs. Well, he decided he was going to be in the drug business, put down on Schedule C, put down a number of expenses, including his home office expense, and he didn't make the drugs himself, so he had cost of goods sold. And he files his return. It subsequently gets audited, and they end up in the U.S. tax court. And he actually was able to get everything except 274D expenses, meals and entertainment, because he had no contemporaneous documentation. but they allowed the cost of the marijuana and some of the drugs he sold. They allowed business use of the home. They allowed office supplies. He had to buy packaging material, of course, for his marijuana. And he even had a business trip down to San Diego. He lives in California, and they allowed that. He must have had to make a home delivery. I don't know. So as you've seen before, Congress gets things wrong. The media gets things wrong. So, of course, some media outlet somewhere, you can see the front page of the paper. Tax court allows deductions for drug dealers, right? All misconstrued. Congress is outraged. Senate has hearings. Senate wanted to pass a law that said every dollar is taxed. And back when Congress listened to their attorneys, the attorneys said, you will have an issue with respect to cost of goods sold items. The 16th Amendment gives Congress the power to tax income, not gross receipts. The feeling was if they taxed the gross receipts or all income without, call it what you want, no allowance for cost of goods sold, it would be an immediate path to a Supreme Court case as a constitutional challenge. So they said you're allowed to have cost of goods sold. Now, of course, that became an issue, and beyond today, how to calculate correctly cost of goods sold for marijuana cases. And we've had a number of court cases that have done this, so I won't bore you with this, but all of those things are out there. Retailers, growers, and the vertically integrated businesses, it's all been litigated at this point. So as part of this, they cited a 2020, Congressional Research Service cited a 2020 TIGTA report that we have somewhere that looked at California, Oregon, and Washington that respectively, and along with Colorado, that's not mentioned here, have all had legal marijuana since 2012, 2014. California older, if you look at how some of the medical marijuana worked. And they identified a whole bunch of problems. Aside from the non-compliance with the tax return, there's a lack of guidance, no kidding. And they there's no way to, just like ERTC returns, there's no way to identify what you're doing, right? There's no box that says we're in the marijuana business. We met a couple of years ago a fellow who didn't want to disclose he was in the marijuana business. So he had an entry on the partnership return, non-deductible selling expense, $4 million, whatever the number was, like $4 million. He got audited. And in the audit, CPA is laughing. What do you think the first item was on that IDR request? Please identify non-deductible selling expense, provide worksheets, calculations, etc. So you can't win, right? Had he just said it was marijuana business, it was profitable, they probably would have left him alone. But he wasn't that smart. Okay. Documentation. That was the joke with being your Valentine. All right. Another question was whether you can do segregation of expenses, have two businesses, and in some cases you can, and that allows you to have some deductions. State legalization does not provide you with relief because even if it's state legal, it is federally illegal. So this was released a week and a half ago from Congressional Research Service. If you can't find it, email me. I will send you a copy of it. It's an interesting read. So what are the paths to reform that Congressional Research Service identified after that background? They can move it to Schedule 3, and which would remove it from 280E coverage, because 280E coverage only deals with Schedule 1 and Schedule 2 narcotics under the Controlled Substances Act. This would allow normal business deductions, would probably also allow access to banking, insurance, and everything else, because it will be just like a pizzeria. It'll be a completely legal business. They can completely remove it from the CSA Controlled Substances schedules. I don't know that they're going to do that, because I speculate that they're going to leave non-medical on there. They could just pass a law and make an exception to 280E. Now, remember, a lot of the reform right now is coming from the executive branch. It was not run through legislative branch as a law. I don't think you can do an executive order for this. I do think you would need to pass a law. They could amend 280E, add a subsection that says, except for state licensed marijuana businesses in full compliance and let them go. They could also make a change to 162 and say, notwithstanding anything else, you're allowed a deduction if you're a marijuana business. They could do that. They could do a lot of things here. Rescheduling to Schedule 3 is probably most likely. I agree with that, and that's also what Congressional Research Service concluded. It's just the easiest thing to do. It's easy to do in the short term. It's rulemaking by the agency, nothing else. So they'll just say, effective this date, you're going to do this. Now, I've already heard marijuana dispensaries they're amending returns. They're trying to get refunds. You can't do that for two reasons. One, none of this has happened yet. It's like, oh, I hear there's going to be this big deduction on the new tax law in 5 years. Can't amend yet. The second thing is going to be, I don't know that they're going to make this retroactive. If they do, it'll be to the start of a year or something. You're going to still have a decade of marijuana was taxed, and that's it, taxed unfairly, or more aggressively than other things. All right. If you do these returns, marijuana businesses currently are paying 60 to 70% of gross receipts. Cost of goods sold documentation is key. Sometimes, but not always, a separate business structure might help. All right. Trump accounts, the only thing I wanted to let you know here is that these new Trump accounts that we beat up over the past few weeks, 1 million people have signed up so far. 1 million. And a lot of us have software that doesn't currently let you file it. So I think this is, I hope this is what they were looking for. Maybe not. We haven't heard from the administration that this is what they wanted or not wanted, or that we're reaching the numbers that we want. We'll probably hear more later, both from probably from TIGTA. First, did they get the numbers they wanted? Secondly, did they foul it up? Because you're supposed to check that box on the 4547 to allow them to transfer the data to Treasury to open the accounts. So we're probably going to see studies, TIGTA reports, TIGTA audits showing us all of these things. Now, I think one of the greatest things we have today, and this is why I'm so happy we're doing this, the IRS has an AI policy now, for real. So they're because they're using online enrollment, they're using all of these tools, the agency decided they needed to adopt formal policies on artificial intelligence. There was also a recent tax court case that landed in Judge Holmes, one of our favorite tax court judges. And he just really, really beat the guy up. It was almost a perfect case. Like, they couldn't have hand-selected a better case. I won't bore you with it. We'll talk about it, but I won't bore you. All right, so we're going to talk about the AI policy. The case here is Klinko. Like, he went to the Klinko versus Commissioner. We'll mention the ethical obligations, again, of using this stuff. So 10.24.1 is the Internal Revenue Manual section. It was magically appeared on February 10th, 2026. They codified their policy. That's where you can find it. And it was developed by Treasury as a counterbalance to counterbalance the sweeping staff reductions. Why does this matter? Hey, you and I, if we're going to send an email to somebody, we run stuff through with the AI tool. Why wouldn't a conscientious employee, after spell checking, run it through and say, boy, this practitioner keeps busting my chops. Please double check all of my citations, quotes, and IRM references, right? Why not? So Treasury published an inventory of 131 AI use cases back in January. Half the applications are occurring within the IRS. So the use of AI, the deployment, requires a formal policy so they can have guardrails to protect taxpayer data. All right. So the key use cases, Taxpayer Service has a chatbot. There's legislative monitoring and analysis tools, so it's going outside the firewall, looking at the listings at congress.gov. Hey, is IRS mentioned here? We might need to know. They're using a tool to convert COBOL to Java. COBOL is Common-Oriented Business Language. That's from the 60s, and most of their systems run on it. And the IDRS modernization, the Integrated Data Retrieval System, they're using AI tools to modify either the coding or how the computers talk to each other. So this is one of the most ambitious AI projects, and they want to take IDRS, which runs on COBOL, that was written in the 1950s. The IRS is using AI to automate the code conversion from COBOL to JavaScript or Java, and they want to migrate all of that data to modern relational databases. You might note if you use tax help software, right? You have a Microsoft database. Ours grew too big. We had to get a new, bigger database. They don't run on that stuff. Some of their systems probably run on proprietary, in other words, invented just for you and for this tool type databases. The goal was to completely decommission the legacy systems by 2028. Well, they can't even get basic scanning done. So it'll be interesting to see if they do this. All right. So IRS AI policy. IRS staff can use AI only for specifically authorized projects that have been reviewed and approved. Employees cannot input personally identifiable information, federal taxpayer information, other statutorily protected information, or any other sensitive data into AI systems. You might remember that I've talked about Sharon Fisk. Sharon left at the start of the 47th presidential administration, but prior to that, we've heard Sharon was the head of OPR, and she had talked on a number of issues about practitioners and AI and where that guardrail was. And she was leaning this way, that there are facts you can put in there without mentioning a name. There are facts you can put in there that if there's a breach will lead other people to figure out who that taxpayer is. And that wasn't okay as far as she was concerned. So it's nice to see that they're doing this. AI cannot be used to make binding determinations. So in other words, how good their expert system is doesn't matter. We still want a human involved if it's going to make a binding determination or an action on a tax against a taxpayer's rights, right? So Taxpayer First Act of 2019, Taxpayer Bill of Rights from a long time before that, Clinton administration, Taxpayer Bill of Rights 1 and 2. Those things require human intervention. AI can't generate taxpayer-facing communications without appropriate validations by qualified people. You can't just generate your email without the correct people approving probably that you're sending it and what you're sending. The policy emphasizes that employees should be cautious of AI's accuracy. How great is that? They're right on there. Reza Rashidi is the IRS Chief Data and Analytics Officer. She oversees AI. So they have a Data Analytics Strategic Integration Board. That would be DASIB, right? Because you know that they have an acronym for it. And they're determining what qualifies high impact that requires the additional oversight. There's an AI assurance team of subject matter experts from multiple divisions within the IRS. And they're reviewing the AI applications as well to make sure that they're not violating their own policies. Good stuff. Quinco. All right. Quinco, of course, is an AI hallucination. We knew this was coming. On January 9th, 2026, tax court issued a decision that should terrify us if we're using AI. What happened? Guy did it himself. He didn't check. Case involved fabricated case citations that were AI hallucinations. And Judge Holmes is exactly the guy to get it. Holmes quotes Shakespeare. Holmes is the guy that had the footnote in his one marijuana case where he said, you might notice that he took judicial note that a lot of beer signs from bars appear to be repurposed in marijuana dispensaries, and maybe that's where this "Buds for You" came from, or something like that. So, he's a funny guy for a judge. Quingo owned a restaurant in California. He had unreported gross receipts, shockingly, unsubstantiated depreciation on 2 other rental properties that he owned. He contested the deficiency. That's how he got to tax court. Sadly, he died a couple of months after he contested the deficiency, so his estate was coming in here to do this. All right, so the issues were the income, the depreciation, and the validity of the deficiency notice. He challenged the underlying validity of the notice. So his attorney is Abraham Wagner. He represented the estate. He made the argument that the deficiency notice was invalid because it wasn't properly signed by an IRS employee with delegated authority. Now, remember, we have those cases where non-mathematically calculated penalties, civil penalties and things, you do need managerial approval before you can penalize people. These were mostly found in the international area. IRS Form 5471 for $10,000, 5472 for $25,000. So what happens here? The core argument confused Form 4549A. That's the revenue agent's report, the RAR, that you get, that's pages and pages and pages, shows all the calculations and the amount they want, all the changes. This guy's argument confused that with letter 531, which is the statutory notice of deficiency. The attorney claimed the notice needed to be signed in ink by an IRS employee with delegated authority. Judge Holmes dismantles the argument, explains what's the deficiency notice versus what was the auditor's report, what needs to be signed mechanically, what needs to be signed in ink. And at the end, Holmes notes that the case law from the past already establishes that even an unsigned notice of deficiency is valid. Question was settled by World War II. Kind of old, right? 80-year-old flawed argument. Now, Wagner's brief cited 4 tax court cases to support his invalid notice argument. The judge discovered 3 of those cases appeared to be hallucinated by a large language model AI. One case didn't exist at all, and the other two others don't exist as cited. Right? Wrong year, wrong casing. So the IRS cataloged these things in answering the brief because they have to answer, right? They pointed out the non-existent cases. They gave Wagner the opportunity to clarify the citation's origin in his brief. 3 years ago, that's how those 2 attorneys in New York City got fined $5,000 each, right? They doubled down and said it's real, it's right. Mr. Wagner decided not to address the issue. He listed one of the non-existent cases again, though, in his table of authorities. That's sloppy work. Holmes said the argument collapses like an over-mixed souffle when one looks at the citations used to prop it up. I will remind you, this is Judge Holmes, a sitting tax court judge, said the attorney's argument collapsed like an over-mixed souffle. Yeah, all right. Suggested something cooked up by artificial intelligence. Gotta love this guy. The bouillabaisse of case names, reporter citations, and legal propositions suggests something cooked up by AI. All right, I gotta stop. All right, but these things make me happy, and I hope you find them interesting as well. And just be careful. Okay, let's see. Bill Nemeth says some 2025 wage and income docs are being populated by Social Security and W-2 information. I just did a big update. That'll be interesting to see. Hello, Leslie, Donna, Mr. Bill, thank you. Drake would not let me file for a kid born on 1/20/26. Yeah, that would be true, maybe, because they're not in the 2020. They weren't born alive yet in 2025. But I wonder if you'll be able to file that directly yourself on a 4547 when the portal opens as early as July, or otherwise look into a paper filing. I want to thank you all for joining us today. It's wasting another perfectly good hour of your lives with me. I appreciate it. I hope you do too. Everybody have a great weekend. If you need anything, email me. We'll get any of that stuff over to you. If you want anything we talked about here, copy the teacher reports or anything, just email John at Tax Practice Pro. I will get that out to you, all right, as soon as I can. Have a great weekend.